Hello everyone, welcome to the Ichimoku hourly analysis for the Aussie dollar US dollar FX for Tuesday, December the 14th, 2010. Well, the market rallied over the last day or two and tested the area up above the round number $1, traded up to 1.003, and we can see the large spike on the top of this red bodied candle, where there was very good downside price rejection. Market attempted to rally through the 1.002, sold off and found support down around 99.6, rallied through the 1.002, tested 1.003 and sold off again, traded down through 99.6, the previous support area, on fairly bearish candles, very large red bodied candles, and then found support at the top of the cloud. Previously we saw the market break out above the cloud, and that's a bullish signal, and the market appreciated substantially. That breakout was down around 98.5. The market is now in a second time frame downtrend and testing support around the top of the cloud here, as we can see. So as the market traded down towards the cloud, we could see the size of the bodies of the candles becoming smaller and a shadow on the bottom, and that represents the sellers making less net bearish progress in that hour between the open and the close, and then the shadow on the bottom represents the sellers losing commitment and the buyers coming in at those levels. Then in the hour of trading after that, we had a change of character with a green body candle, so we had the buyers starting to make some bullish progress instead of the sellers, and the market changed trend from a harami pattern, with the next candle making a high and a high low, and then we had the market trending up again for the next candle. The previous spinning top type candle here, the first green bodied candle, actually tested the top of the cloud again. So if this market does find resistance up around these levels and sell off, we can expect the cloud to act as an area of support. Now, just up through this area, this is a very large area of resistance for the market. We can see here at around 99.844, where we had this swing high and the market sold off, rallied through there previously, but that's an area that's important for this market over the coming days, and if we see the market rally up to around there and see some negativity coming in, we could see the market sell off and test the bottom top of the cloud again. Certainly strong resistance, as we've mentioned, up to 1.002 and 1.003. Also, where the market's trading to at the moment, we can see that there was a previous area of support, and that's at roughly 99.6. So we can see here where we had the shadows on these candles and the market rallied from this area. So now we had the shadow on this previous hour's candle, green body candle, and the buyers losing commitment. So that could be a little hint to a change of trend to the downside. At the moment, this current candle is not complete, but we do have a red body, so there could be some negativity coming into this market at the moment. Now, the market is still trading up above the cloud, so the market retains its overall positive bias, but it is trading down below the Kijun Sen and Tenkan Sen, which means that the market is bearish in the medium-term and fast-term time frames. We did have a crossover of the Tenkan Sen below the Kijun Sen, so that is a bearish signal in Ichimoku charts terms, and because it occurred above the cloud, it's only a fairly weak signal. And the reason why it's a weak signal is that if the market's trading up above the cloud and we get that signal, then the market will have to test the area of the cloud usually, and that area potentially offers support to the market. So a much stronger signal if the signal generally occurs down below the cloud, because the market will generally be trading down below the cloud and there won't be any support offered by the cloud. So here it's only a fairly weak signal. Now, if we look at the Kijun Sen, that had turned flat previously, and we can see that the price action was attracted back towards there. That actually precipitated the change of trend, and that represents the market moving into equilibrium in that medium-term time frame. So when the market, the indicators are pointing down, that represents downside momentum. Pointing across it represents a lack of the previous momentum, or a move into equilibrium, and a move by the markets back towards equilibrium as represented by these indicators in various time frames. Now, if the market does trade up above the 99.6 level, then we should look to also the Tenkan-sen and Kijun-sen to act as an area of resistance for the market. So there is very, very strong resistance overhead all the way up to 1.003. Support offered at the top of the cloud roughly around 99.35, and it extends down to roughly 99.1. Now if the market does trade down through the bottom of the cloud, then there's a good chance that we might not see the market find support until we trade down to around this swing low here, which is down around 98.33, 98.34. So not a lot of good solid support down below the cloud. So very important trading over the next day or so for this market. So we do need to watch these important areas of support and resistance.